So yesterday we already had another inflation reading called PPI, and that came in lower than expected. And today we have the big one, CPI, which also came in lower than expected. All right, so headline inflation, the overall inflation in the US is now at 2.9%. We haven't seen a sub 3% CPI reading since 2021. It's been 3 years. We're finally in the 2-digit range, which is absolutely fantastic. CPI, core CPI is now at 3.2%. So both went down about 0.1%, right? So overall, this is fantastic. This is what we want to see for a couple reasons. Number one, when inflation comes down, that means things and services should be getting cheaper, right? That means our purchasing power has increased by 0.1% month to month. But yeah, in reality, are we going to notice a 0.1% drop with goods and services? No. But it's good to see that inflation is going down. Now, the other reason why this is good is because, of course, we're going to have the very first rate cut in the US next month since a long, long time ago, since like 2020, since 4 years ago. And right now, after the CPI inflation reading, this is what it's looking like. We have a 58.5% chance that the cut will be 25 basis points, which means 0.25%. And 41.5%, that'll be a 50 basis point cut, 0.5%, right? From our 5.25%, which again, we have been there for quite a long time, right? So this is what it's looking like. Now, unfortunately, we're not getting a bigger percentage on the 50 basis point cut, but still 41% is pretty substantial. Now, it's really going to depend from here on out. It is really going to depend on the economic data that we receive in the US. If a lot of the economic data shows that the US is falling really quickly in terms of our economy, jobs, our labor force, things like that, consumer sentiment, home builds, if everything is slowing down like crazy, that's definitely going to increase this percentage right here, which is what we want to see, right? But right now, it's still leaning more heavily towards the 25 basis point as of right now. So that's the latest. Now, some people argue that all the inflation reading are baloney and fudged and faked. That could be. We have seen categories being excluded, right? Probably on purpose to make the numbers look better than it is. It could be a possibility, right? But overall, we're moving according to plan, Powell's plan, which is to bring inflation down to 2%. Then he's going to start cutting rates. Hopefully, it's not too late. Hopefully, the U.S. economy is not going to fall into recession before those rate cuts and the effects of the rate cuts kick in, right? It seems like we're like right at the cusp right now. But as for Bitcoin, right now, we're still in fear mode. We're not in extreme fear, but according to Fear and Greed Index, we're still in a fear mode, even though it's funny because I just came across a video that I created or I streamed in March when Bitcoin was coming up, when Bitcoin first pumped from the 50s to 57,000. I mean, the attitude was completely different. We were in extreme greed at that point. People were so ecstatic that we were in the 50s and the market was going up and everyone was feeling good. And now in reverse, even though we're at like 61,000, somehow we're in fear mode. That's just how how things are. It's just really bizarre, right? Should we really be in fear mode right now? The answer is no, we should not be. Yet somehow the sentiment has changed so much that even at 60, 61,000, we're somehow afraid of Bitcoin. That shouldn't be the case. You know what? And the ETFs kind of prove that. The big institutions and whales continue to load up. Yesterday was not a bad day. Overall, plus 39 million inflow. BlackRock again took in about $35 million. Fidelity 22. ARK took about 16.5. Overall, not a bad day. But again, I like to point out that BlackRock never outflows, only inflows, because Larry Fink understands this is the time to load up, right? That's why Larry Fink is now the third largest holder of Bitcoin, or BlackRock is, okay? I shouldn't say Larry Fink, but you know, he's the guy in charge, right? Third largest holder of Bitcoin. Soon will surpass even Binance. And at some point, he's going to flip above Satoshi Nakamoto. That's not a good thing. That's not a good thing at all, right? But think about it. Within just 7 months, BlackRock have accumulated close to 350,000 Bitcoin. 7 months. What about 7 years? Right? What if you times this number by 7 or 10? You know, we're talking about 3-4 million in less than 10 years. That's going to be wild. That's going to be wild. That's not a good thing, but that's the way things are moving right now, right? Because the big boys, the institutions are playing catch up, and they finally understand what retail has been talking about in terms of Bitcoin. And now they are getting ready to dominate, to take over. That's not a good thing. So just be careful of that, okay? Don't let all the Bitcoins go into the big boys' pockets, or their wallets, I should say. You want to load up as much as you can while you still can. If you want to comment on anything I've said in this video, make sure you head over to the Roundtable. The Roundtable is a new social media platform created for conversations. And best of all, it's spam-free, bot-free, unlike here on YouTube. And you could have conversations with me and others like Altcoin Daily, Scott Melker, Mauro Nafal, and many others are joining daily. And you also get rewarded in tokens for doing so. So check out the new Roundtable. Click the link in the description below.